Today, folks, those of true degeneracy think past performance equates to future returns. On the back of this incredible hype, this Trump rally, we are now in a correctional period because obviously there wasn't a lot of fundamentals behind what we've been seeing in the market, yet people are going to point to Jerome Powell recently stating that they're not in a hurry to cut rates, thinking that's what's pulling the market down. If anything, this is just an excuse, but there is a one-to-one correlation for this statement and the Canadian dollar continuing to tank. We're going to get to that in the latter half of this video as the bears run rampant. The second a little hint of a sell-off happens, we start getting a crap ton of videos out of me, Kevin, like the top 10 investments for the coming 2025 recession.
Number one, robotics.
Robotics. That is the best thing you can buy for the recession here, folks. As most people say, here we go again with another recession for the 12th time in 15 months for me, Kevin. And that's largely on the back of the guy actually speculating in true degeneracy on what's going to happen tomorrow as his ETF largely underperforms the market, shorting crypto, buying stuff like McDonald's and Treasury bull shares. I don't know what the hell this guy does. It doesn't make sense because I don't speculate on what's going to happen tomorrow. I am a true dollar cost average investor. I buy the highs, I buy the lows. What we talk about today will not matter in a decade as it has the decade before. And I am getting absolutely rich, hitting the seven-figure mark just from this simple strategy. And here we sit, guys. Let's review. Let's take a look on this path to financial independence that Dale will one day retire early. If you're on that path, subscribe, join me on that journey, and like for more videos like this. This is not updated. I am likely down thousands of dollars, as many of you are, on the back of this incredible sell-off. Now, I see this as nothing more than a buying opportunity because we just saw an election cycle where the Trump rally that was unfundamentally driven pumped 5%, and now that hype is burning out. As mentioned, don't chase FOMO, just wait, because we'll always go into some of these correctional cycles, right? And a lot of people seem to think, again, this is on the back of Jerome Powell saying, I'm not going to cut rates. However, this is detrimental to the Canadian economy, not the US economy, because it's inevitable that they're going to continue to cut rates. And the last rate cut really didn't seem to budge the market. I don't think anybody actually cares about this anymore unless you're a Canadian. Why do I say that? Well, take a look. The Canadian markets have actually removed some of the volatility. I mean, if you look at the S&P TSX, it has only dropped about 1% on the back of the S&P dropping 2.5%. But you have to keep in mind, this is like not showing the true picture. The fact is the Canadian dollar just in the last week has actually dropped 1.2%, showing that you've actually lost an extra 1.2% in global purchasing power if you bought any Canadian stocks. And the reason that this is happening is because when Jerome Powell says he's not going to cut rates any longer and we're going to take this slower, right now the US federal fund rate is at 4.75%. The Canadian fund rate is sitting at 3.75%. So if I'm a Canadian that doesn't want the risk of a US market cycle, or if I think things are expensive and I don't want to buy gold or crypto, I'm going to look at money market funds, savings accounts, GICs, treasuries, and there is no better place right now than the United States to get a better yield. So when we get this disparity in our interest rates, it causes Canadians to sell out of their Canadian dollars into US dollars, causing a supply and demand, because it's all currency is. If I'm buying a lot of Canadian dollars, the value goes up. If I'm selling a lot of Canadian dollars against another currency, the value goes down. This is why we do not keep any more than 20% of our entire portfolio in the Canadian economy. I mean, we just consolidated our Canadian stocks, which my wife has held literally since the bottom of the pandemic, still took incredible fat gains on some of those companies just to consolidate them because she still owns them in this ETF. It was just easier to cost average for both of us, right? So when I look at this, so many of you ask me, like, what do I do? Do I start converting? Do I wait for the Canadian dollar to recover? Should I just focus on Canadian stocks for now? And my answer to that is no, because you don't know what tomorrow brings. And the fact is if you're Canadian buying US stocks, even still in the last week, you take a look at something like VFV, which represents the S&P 500, but the currency converted version, you can actually see that over the week, you are down substantially less, right? I mean, you're down 1.62%. And that's because the dollar just got so damn weak. So this is why I don't care. The dollar will start to recover when they reach a median parity with interest rates, when the US catches up with Canada. That might not happen soon because Canada's virtually in a recession and they have to cut interest rates more aggressively. So it's going to be this, give and take at least until the Federal Reserve says we need to cut rates more and we get to that point of buoyancy. However, again, I don't care. I am a cost average investor, and my wife and I, the only thing we want to hand pick is our own growth oriented stocks, because we own dividend ETFs, we own the S&P. It's the broad part of our entire portfolio, but there's about 20% of our portfolio, 10 to 20%, where we're hand picking our own tech companies, right? And it's nothing unusual. We're talking about stocks everybody's aware of, like Google, for example, which I could have bought at a better time, but I don't really care because I just converted the currency. I start picking up shares, and I will continue to do so until we fill the position, which right now we're about half, or we're 50%. We got about 50% the size right now of our Meta position, but we want it to be about 75% the size. So we got a little farther to go to continue to build this to where I want to see it, but I'm happy buying it here, and I'm happy buying it lower. Outside of that, the only thing that's really printing is anybody that has owned US stocks. I mean, you've made an ungodly return this year because, again, if we go take a look at that Canadian dollar and you take a look at the 1 year chart, from the peak to trough, we've seen a 6% drop. That means I am actually up on my, the S&P 500. If you take a look at the same time frame, you've seen a substantially higher gain than you've seen if you were not a Canadian. If you were just a US investing in the US markets, you're not seeing the same kind of results. And that's good for you because it sucks being a Canadian losing our global purchasing power. I know when I travel next time, it's going to hurt a hell of a lot more. Now, outside of the weaker Canadian dollar, my go forward 2025 plan is to be super, super aggressive. As many of you know, I already pulled out like 30K, huge chunk from my corporate account to pay down the mortgage. So again, I'd sleep easier at night, but I still have a lot of cash in my corporation that I can't comfortably pull out because me and the wife are now in a higher tax bracket. So we're just going to wait for the year to turn over, at which we're aggressively going to continue to top up our TFSAs. I did the calculation and I still have about $74,000 of tax-free savings account room, which is incredible because the TFSA today is worth like 120K. So we could very likely, with a little bit more growth, actually get over $200,000 worth of room in that account, which would be insane because that's tax-free income in perpetuity for the rest of my life. And once we contribute that capital, we're going to finish the Google position. I am looking at adding a few other stocks, again, just to continue to diversify out our individual tech holdings. And some of those include Tesla. And I told you after the election, I wouldn't care what the value of Tesla was. I think it would make Elon one of the most powerful CEOs on the planet, and I would buy into it. But it ran so aggressively, and my inner soul, my inner value investor said I can't just buy into a hype rally because I'm not going to trade it. I'd rather cost average and try and own it. So I'm waiting and praying that it comes back under $300 or somewhere where I can feel comfortable cost averaging into it again. I've watched so many self-driving videos, and I think Elon's right. I think we're finally there. I've watched some really incredible, it still has mild issues, but to the extent of what it's capable of today, I think easily self-driving will be capable by next year at this point. And I'd like to be a part of that with the top of robotics. But again, it comes with extreme volatility, and it would still be a small percentage of our portfolio. But you have to recognize it doesn't matter what you love in this market. Amazon, I think, is a great buying opportunity. It's dropping dramatically. Meta, Google, Microsoft, these companies that were largely overvalued are retracing. Nvidia, with the exception of some things like Palantir defying gravity along with Tesla today. I've never wrapped my head around Palantir. I haven't bothered to deep dive enough, and I wouldn't be comfortable buying such an absurd rally and the valuation that it holds. And that's just my opinion, but I'd love to know, are you guys buying it here? Do you still believe it has quite substantiated returns in its future? I'd love to hear about all of that, along with you crypto buyers out there. Our crypto wallet's done pretty well as of late. I feel like everyone's going to freak out on this. We're going to see so many YouTubers freak out on this sell-off, but it's so immaterial, and it is just another dip buying opportunity, unless there's a black swan event. This does not constitute financial advice. Of course, these are just my personal opinions, but I'd love to know what you're doing in that comment section below.